Hello traders, the title of this video is Forex Trader explains his euro-dollar trading strategies in 2017. Okay, so what are we looking for? What is my euro-dollar strategies? Always trading around key levels. So the first key level that one should not forget in 2017, if one is trading the leading currency pair, the euro-dollar, is the long-term equilibrium price level. All right. So the first long-term equilibrium price level for the euro-dollar in 2017 is 10847. 10847. One does not want to forget that key levels is the first long-term equilibrium price level for the euro-dollar, which is also the leading currency pair. Right now, the price is below the long-term equilibrium price level, all right, which means we will be giving priority to bearish signal below that long-term equilibrium price level, okay, all right, until the price, finds a valid support level. So long-term equilibrium price level 10847. Note it down. Do not forget that level at all throughout 2017. Very, very important. Very, very important. The reason is for the euro-dollar, because it's a leading currency pair. That key level is critical for us to know exactly what is likely to happen in the forex market, talking about the correlations between currency pair. All right. The next key levels that we can monitor up to the end of February 2017 is the short-term equilibrium price level. The short-term equilibrium price level, the current short-term equilibrium price level for the euro-dollar is 10582. 10582. As you can see, the price is forming. It's not yet completed. Will it complete it? We will see. All right, that is the question. Is forming an inverted head and shoulder chart pattern. So it will be nice if the euro can pull back near the short-term equilibrium price level in the zone of 10582 and find a support. And hopefully, repeat, hopefully, it will manage to go above that critical long-term equilibrium price level at 10847. Will it do that? We will see. So we have not yet received, a clear-cut trading setup, but it looks to me that we have an inverted head and shoulder chart pattern being formed on a daily chart. As I explained to trader before, the daily chart is quite distorted, so we cannot rely on a daily chart alone to make our trading decisions. Talking about euro-dollar trading strategy for 2017, we want to make our decisions around key levels. Break a bow, retest, turn around. So as you can see here, the euro 2017, you see we were here, you see. So price went up, boom, 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 where to the first long-term equilibrium price level. Do you think this is just by chance that the price went to that level, 10847? Isn't it good to know where are the long-term equilibrium price level? Yeah. So it just went up beginning of the year, 2017. That's why I said to you, wait until January is gone, and then boom. Now it couldn't go above the first long-term equilibrium price level. Now it's pulling back. Now we have the current short-term equilibrium price level at 10582. We really find a support here and form an inverted head and shoulder chart pattern that remains to be seen. So the price is down below this. So another strategy that we can use, you see here. So we have a channel here. We will use market geometry, measuring the width of that channel. Where is it going? The price below the channel, so we project the channel in the direction of the price so we can pinpoint the possible reversal point for the euro-dollar. All right. I want to move this one, okay? So by projecting the first channel, so we have a new channel here, and we do not want to forget also the media line of that new channel. If it comes out of that channel, we'll project it again one more time. This is about market geometry, and by projecting the channel, this will help us to pinpoint the best place where valid trading setup are likely to be formed, instead of just jumping into the trade anywhere anyhow. So apart from the long-term equilibrium price level and the current short-term equilibrium price level, I have also talked about this level before, 10660, 10660. There are other key levels here, 10924, 11050, and 11475. Okay, so just note them down. But right now we are focusing on 10847, the first long-term equilibrium price level, and the current short-term equilibrium price level at 10582. Now we cannot pretend that we are doing a technical analysis if we only stop on the daily chart. All right, so don't do that. Don't just go to the daily chart alone. So let's go quickly to my favorite time frame, the monthly chart. And as always, to avoid trading mistakes, one must pay attention to the current market pattern. So the current market pattern is consolidation. You can see people are selling at the top here and they are taking profit here. So at the beginning of the year, this is the month of this candlestick bar. This is the month for January, which is normal. Push it to the first long-term equilibrium price level. Now it's coming back down. So apart from the bigger horizontal channel, this level 11475, all right, and 10582, call that as the bigger horizontal channel, we have another channel that I want you to pay attention to. Remember what I said to you before, 10847, very important key level, the first long-term equilibrium price level. So I will say to you to pay attention to this consolidation now between 10847. So there is a new channel. The top of that new channel is 10847, that long-term equilibrium price level. That's the top of it. And there is another lower part of that channel. If I put it yeah, I'll just leave it here like this, without too much exaggeration. I'll put it, that's it. I'll leave it here. All right. So there is a new consolidation between 10847 and 10474. So remember that. So this is what I want you to pay attention to. So there is a bigger channel which I mentioned before, but right now the consolidation that we must watch is between 10847 and 10474. The media line of that smaller channel is the pink line here at 10660. So right now there is a change in the market pattern, not a fundamental change, but a reduction in the market pattern. So we have a bigger horizontal channel, which I mentioned here, but there is a smaller channel that the professional are watching right now. That smaller channel, horizontal channel, smaller consolidation, is between 10847 and 10474. Media line 10660. So professional right now, as I explained to you, because this is the long-term equilibrium price level, anytime the price rises, that's what we want. We want it to rise to the short-term equilibrium price level. There will be people here trying to sell. Trying to sell. Doesn't mean sell by all means, but people will be trying to sell, looking for an opportunity to sell in a region of 10847. So to be bullish for the euro must break above that long-term equilibrium price level, break above, retest, find support, all right, before one can be truly bullish. As long as the euro stay below 10847 throughout 2017, it's more bearish or we may see a consolidation between the 10847 and 10474, media line 10660. All right. So if the pressure is on the euro, it will be dropping down, going to one channel to another channel, horizontal channel. All right. But the bigger channel is still in place. It's not out of the wood here. So the first sign, the first bullish recovery for the euro is to find a support above 10847. Without that, it's stuck in the wood, so to speak. All right. It will become truly bullish if it goes above 11475. If it goes above 11475 and finds support, then the euro may begin a new strong trend. So we may see something like this, probably trying to retest the level of 13974, going up in a new channel. But right now, it's a consolidation, all right? So you see how it came down like this? So if he manages to go above 11475 and find support, there's a high chance for the euro, provided that the fundamentals are solid, that it will begin a new trend. But right now, as I was speaking to you now, there is a smaller channel, between 10847 and 10474, median line 10660. That's how we play it. So professional will be looking for opportunity to sell here. As the price approaching the median line, that's where we are now. You see the pink line? That's the median line. That's the first point where the professional will be willing to take profit. That's why on a daily chart, I was telling you that we leave form that inverted, okay, head and shoulder chart pattern, which means you go a little bit below the pink line and find a support, which means people are taking profit, and then it will go back up. Will you find a support below it? Okay, near the short-term equilibrium price level at 10582. All right, so this is what's going on now. So they will take first profit near the median line, okay, 10660. If it breaks above it, so we are now below that peak line on the daily chart, as you can see. All right, so if it goes down more and try to rally up to retest the peak line, if you find a resistance, people will sell it again, pushing it back down near the 10474. Break below, retest, turn around. Pay attention to chart pattern, pay attention to candlestick pattern, pay attention to the price reaction, talking about price reaction, break below, retest, break above, retest, okay, around key levels. Draw your channel, project your channels, okay, market geometry to pinpoint, okay, the possible reversal point. This is about Forex trader explain his euro-dollar trading strategy in 2017. All right. Okay. On the yearly charts, what do we see? You can see that the euro is going down, okay? But if you look at last year candlestick bar, though this is a bearish candlestick bar because the closing price is below, okay, the opening price, this candlestick bar, in fact, is bullish. All right, a lot of people, theoretically speaking, people will say it's bearish because the closing price below the opening price. But truly, this candlestick bar is bullish because the price went up all the way here into this bearish candlestick bar before they push it back down. All right, but there is an element of this zone is bullish. You see where the shadow here, this is the zone of the bulls. The bull were here. That's why I'm saying to you, the euro will become bullish, you see, if it goes above that level of 10847, the first long-term equilibrium price level, because above that zone, there are bullish traders there, all right? But right now, as we stuck below that level, we should be giving priority to bearish signal, but it does not mean that we just sell, that the price cannot go up, all right? Okay, so we will form the inverted head and shoulder chart pattern and find a support near the 10582 and go back out, or will we find a resistance below 10660 and continue to go down to 10474? That remains to be seen. There's a high chance in the worst case scenario that we may see parity between the euro and the dollar. All right. This is the end of this tutorial about Forex trader explaining his euro-dollar trading strategy in 2017. First, long-term equilibrium price level 10847. Current short-term equilibrium price level 10582. There is a consolidation taking place right now between the 10847 and the 10474. The median line of that consolidation is at 10660. That's where we are right now. We must pay attention. The market pattern will determine the appropriate trading strategy that we should deploy. So now the current market pattern is a consolidation. How do you trade consolidation? That's why you should apply. That's why you should apply. Okay? If it was in a declining channel, then we will apply, okay, a strategy for a declining channel. If it was in a rising channel, we apply that strategy. So the market pattern is so important on every time frame. Anytime you change time frame, draw your channel, ask yourself, what is the current market pattern that will help you to avoid trading mistakes? Happy trading to you all, and speak to you soon. We are the TSTW 24 traders.